All right, welcome back for the episode of Carnivore Trades. Today is Friday, June 23rd, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today here. So markets have a little bit of a late fade. So we'd actually gap down and then buy the dippers kind of came in here and little rejection there around that 435 handle on the SPY, and pretty good sell, made a slight lower low, and then closed, just off the lows. Basically closed where we opened on the SPY here. NASDAQ still remaining to be a little bit stronger here, at least relative to yesterday's price action. If we look at the triple Qs again, not taking out yesterday's low, but really the important thing to me here today is, and I've mentioned this a lot lately, is just that low from Thursday, which we did close below. We also closed below yesterday's low. We had a nice little rally yesterday where they saved that green bar low, and we rallied up pretty sharply. And so we closed below both those levels. So I would say probabilities dictate a further pullback to around the 4,300 handle. Another pattern we're watching is this little head and shoulder. So there's your head and shoulder, neckline, broke down. Even despite yesterday's rally, we never got back to the neckline to invalidate it. And we just take our measured move there. Where does it take you? Right around 4280, right? And that is right in line with 4300, right in line with this little consolidation base, right? So, important levels to watch here going into next week. Historically, last week of June is also very weak. And then usually you can get a buy the dip into 4th of July, but we'll talk about that if and when we get there. Another thing I want to show you too is, we've been talking about this, the liquidity, right? So that is set to start coming out. So here's your Fed balance sheet and follows the S&P pretty damn close, right? And then we had the big up move in liquidity with the regional bank problems. And then we went right up here, kind of tailed off a little bit. And, why are we rallying? Oh, well, look at the liquidity they put in there. Now it's coming out, right? TGA refill, the Fed's still doing QT, and you're seeing the markets kind of pull in a little bit. So does that continue as the balance sheet runs off or as the TGA gets refilled? That remains to be seen here. Just interesting little tidbit there that we are seeing that liquidity start to dry up, and lo and behold, we finally got a pullback. So interesting dynamic. Another thing that came out today, news-wise, Janet Yellen saying that more banking sector consolidation would be a good thing. This is significant to me because this is, if you follow these Fed speakers, these government officials, they say things without saying them, right? So this is her way of saying there's going to be banking sector consolidation. There's going to be more failures. She said the same thing in 2021, back in April 2021. I can pull up an article for you if you guys want. But she said that interest rates rising would be a good thing. This is way before the Fed was even This was back when they weren't even thinking about raising rates, remember? She said, actually, rates going up would be a good thing. And I said, guys, listen to her. She's telling you that rates are going to go higher. And lo and behold, we're at 5.25 right now. So I think that, obviously we know about commercial real estate. That's going to be a headwind. But beyond that, banking deposits are falling. I've talked about this over the last weekend and really pretty much every day this week. Banking deposits are falling. Look at the KRE here. These guys, they can't do share dilution down here. Why? Because it's still down 50%, year to date, or, from 52-week highs. So they're in trouble. We talked about this yesterday. We closed below that green bar, and now we've lost this one as well. So, you're looking at a failed breakout there on the KRE weekly. Not a really good look, right? So we went up here, didn't even get to the 20-week moving average and putting in a little bit of a sell there. That is also, and I said this weeks ago, and I got flack for this for some reason, but I said, look, the reason for the rally in the IWM is the KRE. Oh, look, IWM getting pounded today, down 1.5 on volume. We look at a weekly view here of the IWM. Outside move down. Weekly bear flag still intact. Monthly 20 MA rejection. Monthly bear flag still intact. So again, just some things to look at moving forward. Now, it doesn't mean that we're going to puke tomorrow. Again, if we go back to the SPX, you look on the weekly, it's still fine. You're still inside of this big power bar. But if you close below that on a weekly close, then that's a big negative. And then we can talk about potentially more downside. Another positive here for the market in the near term is that the volume is really light, right? So we did finish with 90 million shares. That's including some after hours. I think we got some block prints that went off there. We had about 8-9 million at the close there, but not crazy volume, and it really wasn't crazy volume all week long. So until you see that volume, if we get a sell-off day, a 2% down day with 120 million, now we can talk about a significant top. But right now, markets are still okay above the moving averages. Trend is up, so we have to respect it. But just some things to look at here. Moving forward, triple Qs we'll get over to, down 1% on the day. Again, didn't get below yesterday's low. So even though it was down more today, it was still kind of kept that structure intact. But we did lose that Thursday bar, actually on, would it be Wednesday? Sorry, these short weeks always get me messed up. And you're above that 360 handle. If you get through that, the 355, then 350, and then 340, and then you got the gap down here. My concern with the Qs is there's a lot of, good weekly trend line there, weekly chart resistance, and a 75% fib. And now we're getting a pullback off of that. And my concern here is that there's no weekly support, really outside of this pivot high there. So, but either way, right now, markets should correct a little bit more here based on that chart of the SPX, and then we'll just kind of go from there. So anyways, triple Qs. We talked about the Russell. The Dow also had a pretty good outside week, 1, 2, 3, 4 down, closing right into those moving averages there, but pretty good outside move down there, so no breakout there for the DIA. We'll take a look at that next week as well. Support, again, going to be that big 331.45 area, and also that green bar low there at 333. All right, over to SMH. So the semiconductors, that was down again. Did close below the 20-day moving average for the first time since, we got to go back to May 12th. So again, it's not super significant. It's not the end of the world. It's very overbought here. It needs a pullback. We'll see how it reacts at 145. If you get through that, you're probably going back to this upsloping trend line there. And then, of course, there's that big gap fill down in that area. AMD, which we've been following closely the last couple of days, 109 held. You're aggressive. I mean, not a terrible, you might be able to get a little bit of pop there. My concern is that you had this area here, basically an island, and the bottom fell out of that. So it does lead me to believe it could be a little vulnerable. The positive is you are still inside of this big green power bar. If you get a weekly close below that, then that is a big, big, big negative. But right now, 109 area should be decent support for AMD. Cloud software down, just like everything else, but still holding the moving averages. And again, you kind of basically held this little pivot there, 334.50 area. If you break through that, then we'll look at 320 and then kind of 315. But right now, that's really all I've got for IGV. Again, it went up into those pivots like we talked about that coincide with those same levels on the QQQ. Dow Transport's hanging in there okay, although they did fade off the highs. Take a look at the volatility intraday here. Gap down, all the way back up, then all the way back to the lows, just like the markets there. Still inside of this green bar. So again, that still has the upside bias to 15.2. You you get a daily close below that green bar, then it's probably. Sorry, I'm just flipping through my charts here. Then it's probably back down to these moving averages, 14.4 area. So that's really all I'm looking at there with the transport stuff. Anyways, let's get over here to interest rates, and I'll get this off of here so we don't have that in the way. The 2-year here, down by 4 basis points, nothing broken with that pattern. That still looks just fine for a move towards 5%. And again, we're getting a lot of global inflation data. Europe's not looking very good right now. And, it's starting to look like that may be the case here for the United States. I know it's a big surprise. Everybody's shocked, but that is the case right now. No problems there with 2s, 5s, 10s, or 30s there. 30s definitely a little bit on the weaker side, though, but that can still go higher. All right, let's get over to housing, XHB. XHB actually was a strong sector today. That can still get to 78. No problems there. It was green and a down tape. Definitely nothing wrong when you see that. ITB can go to 83. VNQ here continues to underperform, down 1.38% on the day. We talked about the green bar low, outside move down, close below it. That's weak into the gap there. Right now, this is probably going to go test 78.75, 78.50. So definitely a weak chart there. And then maybe it can try for a higher low, but again, I say this every time, but that is a ugly weekly look. Let me just get the, that's not a very good look there. So again, anyways, let's get over to fins. XLF down 43 basis points. Again, continues to give you that weekly bear flag look inside of all this here. We never got above the 50-week moving average last week on a close, and this week back below the 20-week moving average. So again, fins still in trouble, as evidenced by what I was saying here early in the video. KRE lost that area. That's not going back to 46 anytime soon. KBE, that's not going to 39.40 anytime soon. So those price targets are off the table. This is into a little bit of support right here. You might get a short-term bounce, but not good to see that bull flag break down there. Broker dealers pulling back as well, finding some support at 460. Talked about this yesterday. Would probably go into those moving averages. That's right where we went. So right in that area, and you got a little micro bounce there. We'll see what kind of pattern this puts in. If it goes sideways, it might set up for another move towards that 450 handle. All right, over to commodities here. Crude, all over the map. I'm going to get rid of this trend line now because this is not as important. I would say it's more likely that you could probably put a trend line in like right there for now. But really, I think this wants to go down to 64. But either way, still just stuck in this range and no new real updates. So far, XLE losing here, 75 basis points essentially on the day. Weekly bear flag. This is set up for a move lower. So nothing has changed there. XOP, same thing. OIH still remains the strongest out of the bunch, but that did slip pretty nicely today. Did come off the lows, but still finished down 1.16%, and still a little bit kind of neutral to bearish on this below 280. And you're still inside of this big red bar, so you can make a case that's a big bear base until proven otherwise. All right, nat gas, big pop there for Natty, up 4.6. That's an impulsive move intraday. So just kind of hanging out here, pulling back early, and then a huge thrust. So this was down about 3% early, and it finished up 4.6. So that's an impulsive move, a breakout above this level. New 3 to 4 month highs there. You got to go back to March 6th. So this is poised for a move to 3. You get through that, it's $3.50 and $4. So nice pop there for Natty. Getting above these trend lines here. And there's also a trend line there as well that we broke out of in addition. So nat gas looking pretty sharp there. Dollar index here up 0.5% on the day. Got back above 103 for a minute. And we go to the weekly here, so it's cleaned up a bit. Still closed below the 20-week moving average. I want to see us get back above 103.75 on a weekly close to really kind of slam the door. But right now, still neutral to bearish until proven otherwise. That big red bar, you're still inside of that. So nothing great there, but it did. Dollar did get a little bit of a pop as the market's starting to realize, hey, maybe inflation is not going away, and we're in a more stagflationary environment. But that's a discussion for another time. Gold here, a little bit of a lightsaber style candle there. You guys know what I'm going to say. If you've been following the channel for any amount of time, we lost the 20-week moving average, right? So this is headed to 19, and then probably 1850. Those are the next big levels here in the near term. Those are not necessarily buy levels. Those are just targets right now. So I'm avoiding gold at the moment. But that did lose that moving average here, so that does give me a little bit of a bear bias here in the near term. Silver, tried to get back above that 200. I still think that wants to go a little bit lower, maybe test 22. Really, 21 is kind of the bigger level right now. But in the near term, kind of a weak bounce. We'll have to see what kind of pattern it puts in next week. And then platinum continuing to fall. Look at this fall. I mean, a few weeks ago, this was at May 10th. It was at 1135. And June 23rd here, we're at 920. So big move down. There is support with this green bar, right? You came down here, and that's where it reversed. So there should be support in this area. We'll see how it, I'm not saying to long it, but, we'll see how it reacts there next week, and we'll kind of go from there. But nice fade there on platinum. Palladium inside day there. That still looks weak here, but we're watching this one for patterns. I do think it's very attractive at these levels, but I want to see it kind of get a reaction first, and then we'll kind of judge it from there. Copper following through the downside today. So we talked about that. Nice little shooting star. Down over 2%. Lost to 200. Held to 20. So it's not broken, but a pretty steep decline. Not on heavy volume, but he did damage that weekly a little bit. So, he tried to get above the 20-week moving average, tried to get above this red bar high, and you still got a weekly inside bar there. So that's still bearish till proven otherwise. And again, my bias is that it moves down to 340. But right now, it's holding up, and we'll just kind of leave it at that for the meantime. All right, Bitcoin here continues to thrust higher, although it did come a little bit off the highs here. So that made a new nominal high. So you got to go all the way back to June, a year ago. So that's a new 52-week high there for Bitcoin. Same thing as yesterday, 32.5. That's what we're going to look for. And then we'll see how it reacts to that. But that's where I'm giving it the upside bias to now. And we'll just keep it simple there. It is a little overbought and extended here, but, you had a nice consolidation. So you can get those types of moves. But we'll look to 32 to 32.5 for now, maybe even a slight pierce of that. That is where I believe Bitcoin is headed here. And then we'll evaluate it from there. All right, lastly, back over to the spiders here. Again, let's use the SPX just a little bit longer here because that dividend's still skewing things, but close below that. Should get to 4,300 in the near term. Positives for bulls, volumes light, and weekly, you're still above this green bar low. Negatives here, obviously, what I just said. Close below yesterday's low, close below last Thursday's low. So we should get to that 4,300, 4,280 area, and then we'll kind of evaluate things from there. Anyways, guys, going to wrap it up here. You guys take care. Have a great weekend. I will talk to you guys all next week.